Welcome, everybody, to your week ahead for financial markets. Mike Smith, Head of Client Education and Trading and Senior Analyst, to help you negotiate your way around the next few days with a roundup of the key factors that may have influence on market sentiment. Let's check that out right now. Our five market moving factors. First one, of course, is that markets are still pretty close to record highs. There is a slight pause that we saw towards the back end of the week, though markets are still holding at or near record highs. US equities have paused at the back end of last week. A couple of headwinds just dampening down enthusiasm for a move to ever higher levels. But there are significant head and tailwinds to talk about, and we'll discuss some of these over the next couple of minutes. We have one of the headwinds, which is the US government shutdown, which still is in stalemate. No sign of any resolution between the two warring parties, as healthcare remains a sticking point. The Democrats holding out after the Republicans are threatening to remove the Affordable Care Act subsidies, which will result in millions of Americans having to pay significantly more for health insurance. We have interest rate decisions out of the UK and Australia this week. We are expecting the RBA to pause on a rate cut after 2 or 3 weeks ago, prior to a somewhat sticky inflation number. The suggestion being that they may move another 0.25% to the downside. So at this stage, a pause is expected. We'll also be keeping an eye on Fed members that are having speeches this week in the US after the rate decision recently in the US. It was telegraphed that a rate cut in December was likely, but possibly less likely than again it may have been a few weeks ago. So just watch for any change in the narrative over there as well. That would influence markets one way or another. One of the things that's helping US markets retain near record highs is, of course, a staggeringly good earnings season that continues to outperform expectations. An 83% beat of expected EPS and a 79% beat of revenues, from around about 50% of the S&P 500 that has reported already in the latest full report. And as a chart to keep an eye on, we thought that Tesla looked interesting, which may test a key level. But record highs in the crosshairs, as you can see on this chart. Those highs were hit back in December last year at around about 480, just beneath that, as you can see back here, prior to this significant drop off earlier in the year. We've now almost regained all of that. You can see us trading currently on Friday around about 456. So a mere $24 away from that P480 level. It looks as though the buyers are in. Tesla looks good in a number of ways going forward. So there's one to watch after Friday's 3.74% move to the upside. Of course, you can keep up to date with everything happening in markets on our Monday and Thursday live market update, streaming live on YouTube or on our Go Markets channel. Don't forget to subscribe to those and the notification bell so you never miss a show. They kick off around about 12:30 p.m. and it'd be great to see you if you can make it along. Also, of course, our inner circle session, as always, at 8 p.m. Eastern time on a Wednesday, where we not only check in on markets but also have a deeper dive on something designed to help you as a trader in our education session. And finally, don't forget our support team is there to help. We're available for platform and account assistance. Of course, we can't give personal financial advice, but if there's anything we can help you with, then of course, give us a call at any time. Most importantly, have a great week ahead. We look forward to seeing you again very soon. Bye bye for now.